the one thing I would tell everyone is figure out what your finance impact narrative is. What's that one thing you can do that no one else can? And you need to get that story out to everyone in your organization. You need to get that out in your LinkedIn. I think, I think we might be entering a part of accounting where if you don't stick out, you're going to get left behind. I really do think you need the story. If you're working on a project, and it's going to be presented to the executives, obviously don't barge in there, but, see if you can even sit in the corner just to kind of get your name in there so people know that, what you've done, what you're contributing.
This is Becoming a Finance Leader of Influence, the podcast where we talk with finance leaders in the trenches, solving real problems inside of real businesses. In each episode, we break down the problems they've faced, what didn't work, and what actually moved the needle, despite constraints like cash flow, internal politics, limited teams, and imperfect systems. The goal here is simple. You leave every episode with at least one clear takeaway and one actionable insight you can apply right away. This is Becoming a Finance Leader of Influence. I'm Alec Borland, and today I'm joined by Kevin Schnake. Kevin is a senior director of finance who spent the vast majority of his career within a Fortune 500 manufacturing company, and today we get the unique opportunity to hear about all of his experiences in improving aspects of the business across every business unit that he's entered into. These are real practical problems that he faced with the actual solutions that he implemented. We'll talk about just general process improvement, integrating new acquisitions, turning around failed ERP systems, and really go over his framework and playbook for being able to add value and becoming a strategic finance partner in every single role that he stepped into. It's value-packed, it's action-oriented. So sit back, grab a coffee, adult beverage, whatever time of day it is, get a notepad, pen or paper, and enjoy the episode. Kevin, thank you again so much for being here today.
Thank you for having me.
Yeah, I'm very much looking forward to this conversation. It's nice when you know the other person on the other side. There's people that I've done these conversations with that I don't know. We've gotten to know each other in 2025 here. So, the goal of this conversation, Kevin, is really for our listeners and viewers to be able to walk away with one tactical and tangible action item that if they're facing a similar problem that you've solved, they can have a playbook to immediately assess that and get a better result from it, right? But again, knowing your background, knowing what you've done, I feel very confident we are going to hit that goal very early on. So some of the things, before I let you introduce yourself here, some of the items that I definitely want to talk about, just knowing what you've been able to do, is implementing SOX, right? Both as a assistant controller and controller, joining a Fortune 500 organization, walking into a failed ERP implementation and some operating procedures that weren't exactly ideal. You were able to shorten close from 5 to 3 days, not once, but twice, establishing inventory controls and cost tracking, cutting internal prep time by 25% throughout, leveraging automation of supporting schedules and project process improvements. You implemented a profit sharing system to overcome intercompany pricing issues, integrated 3 acquisitions, created a shared service model, revamped an inventory strategy, and increased forecasting accuracy by 17%. And so I obviously had to make a list. I had to make a list because I couldn't remember all of that. So before we get right into it, why don't you give us a quick overview of yourself?
Again, thank you for having me. Yeah, so I've worked at previously at some other companies. For example, I did work at American Eagle Outfitters. So I have a very large, I have a whole closet full of graphic tees. Uh,
Okay,
yeah,
there we
but
go.
but really, in the last 20 years, I worked for a company called Wabtec. If you are not familiar with who Wabtec is, they're a Fortune 500 company, like you mentioned, a manufacturing company, and they make most of the locomotives that you see, freight locomotives you see in North America. They're also in transit, like buses in Europe. But pretty much, if it's moving a person or product and it's not in the car, Wabtec's involved.
Got it. Okay. Yeah.
Yeah.
And I know, that was one of those things when we first started talking. It's crazy because I didn't know who they are, yet they're this big, large company.
Yes.
I'm also in Cleveland and
Yeah,
you're in
even in
Pittsburgh.
Pittsburgh, they
So
are one I think of. Yes. Oh, yes, yes, in Pittsburgh. Yeah, so they're one of the I think the 10 Fortune 500 companies in Pittsburgh, and yeah, even here, they're kind of, you don't really hear their name, a lot.
yeah. Well, I mean, it's such a specific industry, so to speak. So not a huge shocker per se. So let's get right into it then. I mean, because again, this is all about. I want to dive into the nitty gritty.
Yeah.
I don't want to talk about the high level theory. Let's get into the problems that you've actually solved. And why don't we just start with, and it kind of follows your career there. You joined the organization. You are a assistant controller in one of their business units. And this is right when SOX was being implemented. Is that correct?
Yes, yeah, it had just been announced, and, how can I put this nicely? It was a law that was passed with very little guidance on how to actually
Mm,
implement it.
yeah.
So, I was really hired by Wabtec for 2 reasons. One was obviously this Sarbanes-Oxley implementation. So, half my time, I'm working directly with EY because, again, even they were kind of unsure, what to do, how do you address ensuring that you have all of the controls in place? Our initial we could kind of create like a grid with the risk and detective or things that you could use to detect issues, and we were going crazy at first. Uh, you know, a vendor calls, and that's how invoice hasn't been paid or processed. But yeah, how the heck would you ever test that in the real environment? Right? I could call your vendors and say, "Hey, do I have any open invoices?" So it was really just working directly with EY and kind of creating a system that made sense. One that again where you could have both prevention and detection controls, but then also how would you be able to ensure those controls were in place?
Got it.
And then the other side, as you mentioned, it was they had went live on Oracle. The funny thing was that the shop floor people, people doing the actual input, were still using their old Unix system.
Okay.
So they would do
Naturally.
all. Yeah, well, that's what they were doing. They were doing all the work in Unix, and then they were magically making inventory appear in Oracle so you could ship it. So as you can imagine,
Okay.
it was just a disaster. I think the year before I started, they had to do, I believe, almost 4 physical inventories because they had no idea what was on the shop floor. Go in and the whole plant 4 times just to count inventory.
What did you guys think was originally going to work that didn't work? Or by working with EY, were you guys able to get it right relatively quickly?
Yeah, like I said, we did a lot of processes. We did a very large flow chart process, which was good to have, so it kind of helps you understand how everything flew through the system. But originally, we thought that would have to be maintained, and it really wasn't. It was, very cumbersome. The other problem was, every location did something slightly different, so now you
Yeah.
have multiple variations of this flow chart process. So it was really, again, just trying to what worked, and then really the more critical one was what could be audited. Because
Okay.
again, going back to the a control to make sure I have all my invoices is that the vendor will call and say, "Why haven't I been paid?" Again, that technically is a control, but it's a non-audible. So we took that off the grid. So it went from like 100 controls, down to really the core key parts that if you tested
Got it.
these, let's say 12 controls, and I truly know, for example, I worked on the accounts payable, which, they still could use that control today. But if I ensure I have these 12 controls are in place, and yes, I can say with confidence that I do, but there are no risk, and I've been able to address any potential issues.
Got it. Okay. So, real quick before we move on to the next section, then, Kevin, when it comes to, implementing any sort of regulation, what did you learn from that SOX implementation where you guys had a plan initially that didn't work, or did working with EY, were you guys able to do it relatively easily?
No, there was definitely a lot of false starts. Like, again, just because of the lack of guidance. For example, we created a complete mapping, like you would see where the box arrow thing, you know what I'm
Yep.
talking about?
Yeah,
Uh,
flowchart.
yeah, flow chart. Thank you. Yeah. So we
Yep.
completely did a flow chart of every process. But then what we found was every location did something different. So now you're talking about hundreds of different flow charts. So it was really, again, sitting down what made sense, what can be audible, because again, going back to the vendor, calling up to your vendors, excuse me, the opposite, your vendor calling us because invoice did not get paid. Yes, technically could be a control to show that you're missing an invoice, but
Yeah.
you can't audit that, uh, short of, again, calling every one of your vendors. So, just a lot of, that was a very, again, very strange situation, again, because no one really knew what would be the best approach. So it was a lot of trial and error.
Yeah. Yeah. No, I mean, that makes sense. It's regulations are always fun, especially
Yeah.
when they consistently come out with new guidance and it's like, "Oh,
Yes.
actually, we're gonna do it this way now."
Yes.
But one thing I'm like scratching at my neck to talk about because it's so relevant and I'm just seeing a lot of it because in 2025 we had a lot of clients that, they're being sold on, or at least everyone's trying to sell them on getting AI into the finance function. And that's
Yes.
something we can circle back on at the end if we have time. But there's no point in dropping that Ferrari on top of data and ERPs that aren't clean. And there's a crazy stat out there. It's like over 80% of ERP implementations are botched. Your next role, I think this is when you moved into a new business unit. You walked into a company that had an ERP system that wasn't implemented 100% correctly. They had some operating procedures that weren't necessarily best in class. Tell us a little bit about that situation, kind of what you were walking into and what your overall goal was stepping into that.
Yeah. The first indicator was when I looked at the number of manual journal entries that they were doing a month, and it was in the hundreds.
Oh my gosh.
Oh, yeah. They were on Oracle, and I'm like, this should be mostly automated.
Yeah.
And what was they were spending all their time correcting bad setup issues. There were literally transactions being done in Oracle that would debit and credit the same account.
Okay.
Well, yeah, so if ship a product and your inventory didn't change on the ledger because why it was debiting and crediting inventory instead of going to cost of goods sold.
Yeah.
Well, it was just that was literally sitting down and going by every transaction type, pulling up where is it being mapped to, and just correcting that. Yeah, again, that was again, if you ever buy a company and they're doing that level journal entries, that's really is a very good indicator that something's going wrong.
Kind of like a quick red flag. Hey, we should
Exactly.
probably dig into this.
Yes.
You said it was Oracle. What NetSuite was that or sorry, what software was that business on?
No, they were using Oracle. It was just a
Okay.
bad. This is one of those, and I've seen this happen where IT went in to the location and said, "How do you want to see Oracle work?"
Okay.
And unfortunately, it was sort of the blind leading. You know what I mean?
Yeah.
Uh, uh, how they want Oracle to work wasn't the way it should be working. And, I can understand IT, they were trying to be flexible, everyone's a little bit different, we'll make it flexible for you. But unfortunately, the people that gave them the instructions apparently did not have accounting back.
I think that's very commonplace. That's why it's like it's so important to get your finance function and leaders involved in those
Yeah.
discussions because they ultimately know what they want to be coming out and they know that the correct inputs that need to go into it. Um,
Yeah. And I've
s-
been involved in many Oracle implementations. And again, like you said, if you're a finance person, you've got to be the lead on every single area. So even something like customer service, you might think, well, why am I involved? Well, you're involved because they're going to be using order types, and you have to ensure that those order types are going to be mapped properly to the general ledger.
yeah.
If not, again, you're going to be making a lot of spending most of your month in close correcting problems.
Well, it seems logical that your end users who are like intimately involved with the system should be very involved in setting it up to get it right from the first place. But again, like I don't know what the exact stat is off the top of my head, but over 80% of implementations fail, and those are millions of dollars, and for bigger companies, probably flirting with, uh, double digit millions of dollars. So when you walked into that one in particular, what were kind of like your first three steps? So, from the ERP side, and then also on the kind of getting those operating procedures back on track to where they should be.
Yeah. Well, that one's a very unique one because there were so many set of errors. It was going to take a lot of IT's time, and so I just made this decision. I kind of wanted to move them into a shared services model anyway, where if I have 7 locations, I don't need 7 AP departments. I really don't need 7 locations collecting cash. I always like to set up like a center of excellence,
Yeah.
have one AP department that runs all 7. So instead of just wasting the time just to correct this problems on, Oracle instance X that they were using, we just moved them over into part of that shared services.
Okay.
Yeah.
How long did that take you to do?
6 months, but it was
6
gonna
months.
take 6 months really to go through and recorrect again, it was such a bad implementation that the
Mm,
system it was gonna take 6 months to go in and basically recode the whole system anyway.
okay. So it's kind of that one was just a complete overhaul.
Yeah, and again, it wasn't that bad because it was Oracle to Oracle, so, yeah, technically, all we had to do was just activate the vendor flags in the shared services because they were already in the system, so it was pretty easy to copy things over.
Here's a kind of a leadership question off of that then. So when you're doing that, I'm assuming you probably had to let some of those AP people go from those different 7 locations. How do you navigate that in the sense of like, they're probably helping to almost get rid of their jobs, no?
Yeah, that's always a very delicate situation. Um, usually good thing about accounts payable is that usually they're involved with inventory, and then sort of as you're working with them, again to kind of move their job over here. I've just tried to work to ensure maybe that there's some place in the company that they can move to. But to
Mm,
your point, yeah, I've unfortunately had to during my time, we've had to close locations and, working with people that, unfortunately they're, going to teach someone else their job because, their facility is closing down. So it's never,
yeah.
it's always not a fun time when that happens.
Yeah. So first step, really try to figure out, hey, can we plug them somewhere else within the business? And
Just
then from
try
there,
to
it's
get,
just kind of being empathetic.
and just be open. People are smart. If you try to, um, if you try to work around them, if you ask someone, "Hey, I need you to train person Y," and they're going, I mean, they're not dumb. They know
Yeah.
something down the flag. So I just again try to be as open as you can. I mean, sometimes you can't. I mean, it's it's if it's going to be a part of a bigger project, sometimes you have to. Open communication isn't possible, but just try to be as humane as you can.
Yeah. 100% well said. The next one I have on my list here, you've done twice. And this may or may not have been in the same business unit, but the one of the top items, process improvements that everyone in the accounting department wants to do is reduce close time.
Yes.
So you took it from 5 days, which is already really good, down to 3. Walk me through kind of how your framework for doing that.
It's really just it's baby steps. Every month, just do something a little bit better. Now, initially when I came in, everyone was very paper based, so I still had people printing reports and then taking that report and then typing the numbers into another report, and
Yep.
then printing that report and typing those numbers to a journal entry. So the first thing was just really, again, this is when I was a assistant controller, again, controller, was just really sitting down and understanding what everyone was doing during month end close. I really would suggest if you are becoming a controller, I hate to say, you almost need to know exactly what your people are doing to the point that you can almost jump in. And that really allowed me to understand, it became pretty quick quickly obvious, where the issues were. Again, the example is the person printing reports and then typing it in. I was able to show them like, okay, what we're going to do, we're going to take this report and I'll create a little schedule for a little journal entry schedule for you. You can paste it here on sheet one, and then we're going to do some fee lookups, some sum ifs, whatever, to pull this into your journal entry. And really, the first round of going from the 5 days to 3 days was quite honestly just automating things that were just being done, and putting check figures. And that was a big thing. Our accuracy actually went up, and that's really something you really don't see in the 5 to 3 days. The accuracy actually improved. Why? Because it was people weren't five key, they weren't typing
Yeah.
things in. It was all being automated. And it also allowed us to put check figures just to make sure that if the report total was supposed to be $1 million, the total of your journal entry was also $1 million.
Got it.
And before that wasn't being done because it was, just a rush to get everything done within the 5 days.
Yeah. So I mean, I think the starting point should be universally applied is you can't improve if you don't know where you're at. Because I know
Exactly.
a lot of people will, when they're doing their initial mapping exercise, they try to map out future state because we want to see what it could
Yes.
eventually look like, but you have to start with what it actually is. I think that's applicable to even outside of finance, right? If I'm trying to map out my business's core functions, I've got to understand exactly where we're at today to see those areas to optimize. And because I'm so ingrained in it and understand the business, I'm going to know the areas where it's like, oh, well, I need to connect these two dots and add, like you said, in accounting specifically, the check figures and everything else to make sure that it's right.
Yes.
That's excellent. So next on the hit list here is, and I can't remember which role this was in, but establishing inventory controls and cost tracking, which in a manufacturing environment, two of the big things. So walk like in this specific, what you're able to do here, what was kind of the problem that was sticking out to you or to the business or that was getting in the way of that business hitting its goals?
Yeah. And you kind of mentioned this before is if you have bad data, you're going to make bad decisions. Even if you make the best decision on the worst, bad data, it's still going to be a bad decision. Our goal was we needed to truly understand the margins by almost every group item family type. Because we were at a situation where in order to grow the business, what we were finding was, it's a 20-80 rule. 80% of our profit was coming from 20% of the items. You can't say that with confidence unless you know for certain that your costs are correct. So again, that was just sitting down and looking at the variances. Why do you have our purchase price variance? Now, it could very well be that especially these days, the vendor increased the price. But what we also found was, well, it used to be I made it inside and now I'm sending it outside. So, okay, that's why I'm getting my variance. Go into the system, change that item from being a make to a buy, uh, ensure that the system, to me, the key has always been make sure that how the system is set up is really what's being done on the shop floor. Because if they don't agree, then again, you're going to get bad data, you're going to get bad costs. And again, you can make all the great decisions you want, but they're going to be wrong.
Right. Was there a specific was the business unit just underperforming and that's why it's like, hey, we need someone to come in and look under the hood here?
So I did a couple of times in my career. The first time it was a good business unit. They were sort of a cash cow, but we wanted them to be great. They were okay. They were making double digits EBIT. They were never really a problem, but I knew that they could be better. And that's, just sitting down and, I think during the time I was there, we doubled their EBIT from 10% to 20%. Just better focusing. And, again, by having that better data, it allowed us to make great decisions on where to focus our effort. We found that there was items that we were making inside that, quite honestly, we could do cheaper outside. And conversely, there were, things we were sending outside that just to, sometimes you just to either get the absorption or get the time inside, it was better to move it inside. The other one was it was a group that was given because 3 locations were losing money or had very low EBIT, and it was just really, I hate to say it was like we need to ensure that the juice was worth the squeeze, if you will.
Sure.
That we were in the right markets. They were all over the place. They were in oil and gas, automotive. We were even making product to process pigs.
My gosh.
Yeah. Anything to really keep they were doing everything they could to just to keep the, wheel spinning in the business, and I think it kind of got them a little bit too distracted, although the pig processing one was very profitable, so, uh,
That's so wild. But
yeah,
I mean, if it works, it works. But I
yes,
know, like it's that's common thing in business in general. Again, is just that core focus area. See a
yeah.
lot of I think in well, a lot of what I see is if you don't have that one specific, as you said, cash cow, it's kind of hard to go out and do those other experiments. You just can't get experiment heavy, aka you can't move away too far from your core product or service.
Well, I think the thing with us is that I'm not speaking out of turn here. The U.S. locomotive market is obviously at best sluggish these
Yeah.
days, and it's really to grow. The expectations that we're going to grow our businesses year over year. So it's kind of almost had us forced us to go into look at other locations or in other markets. For example, I have there was a machine shop that reported to me how are we going to grow this business? Well, they had remembered that they had talked to someone from Mastercraft. Well,
Okay.
that's perhaps I'm not sure exactly how this all happened, but Mastercraft has said, "Hey, can you make the fins underneath our wakeboard boats for us?" At the original time, I think they said no, but uh, you know, just now we needed that, business just to, keep your sales up.
Yeah.
So is that really not a lot of change up in our production? Now the marine business is a big part of what they do.
Interesting. Yeah, so it kinda just, opportunity present itself, ended up being something good long term.
Yes.
So next thing I have written down here, and it's sucks because I can't read part of my own handwriting. Is so one of the things I
Right.
noticed was you were able to cut internal preparation time by 25%, through automation of supporting schedules and process improvements. And I think this is when you moved into more of the corporate side, if I remember correctly.
Yes. Yeah. I would. So I had moved into the corporate side at that time. LabTech just became a large accelerated filer. Uh, Again, the person that had the position before me again was doing the printing, the reports, and hand typing things in. And they were barely meeting their SEC deadlines. So again, it was just sitting down under, like you said, mapping out the process. Where can we take out, annual processes? Where can we take out waste? So one of the things I created was called the strips. Again, we did not have WebTech at that time did not have a consolidation package.
Okay.
So I created it where I could go in and have everyone create a little quick template, and I would paste them on the sheets, and then the strips would add them up together, eliminate any intercompany transactions, and that would be our our consolidation. And the company used that for many years. I think they were probably over like $2 billion before they even bought a consolidation package. And everything was done even today, a lot of things are still done in Excel, but yeah, the, top level consolidation, I don't think we eventually bought, a Hyperion, but that was like 2016, and they were, I think, like I said, well over 2 billion. So for
Okay.
years, we were just, again, using my little Excel spreadsheet to consolidate the company.
That's amazing. When it comes to, really when it comes to making these changes, because so far, again, we're like halfway through what I want to cover in this sheet here, but a recurring theme already is implementing change. And implementing change is quite tough when you have a lot of different people involved because people inherently don't like change. Um, how are you able to kind of get people on your side of the table, so to speak, when it comes to changing processes, changing what they're used to.
Yeah. And really, it's just really showing them that, hey, you are spending a lot of time, wasteful time doing things. Quite honestly, it's you have to be like a salesperson and kind of go in and say, "Hey, look, I can make your life better." And usually, if you say that, most people, okay, they just perk up. You know what I
Yeah.
mean?
Tell me more.
Yeah, exactly. I'm going to
Mhm.
make because no one wants to sit there and type things in. People would rather do value added work than to spend, 5 days doing journal entries. If I can get down to 3 days, and that means for 2 days, you could do something else, something that you probably would rather be doing than making journal entries.
Yeah.
And that's really it. So again, you have to be sort of a psychologist and a marketing person at the same time. But yeah, it's honestly, if you go up to someone and say, "Hey, I have a little secret. I'm going to make your life better." You've already broken down 50% of the resistance. And usually it's, if you have one success, and that really breeds more success.
Yeah. I think I agree with you 95%. There's 5% of just I know there are certain organizations with certain people that are so ingrained in their ways that it's incredibly difficult to initiate change, but I 100% agree with you in the fact that the only way that you can get someone on your side of the table is by showing them how it is going to benefit them. It's the in classic sales training, or maybe it's not classic sales training, but the classic radio station of WIFFM. What's in it for me?
Uh,
WIIFM. Yeah.
okay.
So that is the first step in taking any sort of meaningful change. Now, so that was while you were in the corporate side of the business. And then the next item that I wanted to talk about is, and this is a really good one, is an issue arise when it came to intercompany pricing. So I'm wondering how that issue was identified, like who was complaining, who it was affecting, and then how you were able to come up with this profit sharing system.
Yeah. So what had actually happened was, WabTech, we had won a project in WabTech, or excuse me, in South Africa. And it was going to be our first, what you would call a consolidated system, which means normally at that time at WabTech, everyone just sell their own little pieces. And then the end user that would build I would take everyone's little piece and put it into my machine. We were going to sell a full rack system that had everybody's parts on it. So instead of sending like 1,000 different widgets to the customer, they were just going to get one big widget that we would design. Webtex was not really set up for that. Within that widget, I had locations that were used to making 50% margins and some that were used to making 10% margins. The problem was because we were trying to get our foot in the door, margins were going to be like 5%.
Okay.
So it was going to be it was going to be sort of like the old razor blade handle. We were going to give them the handle, if you will, for a very low price, but then that was going to open the aftermarket into South Africa. And so I had to go to all these locations that are again we're used to making 50% margin. Say, okay, if you make 50% margin, you're going to drive this. We're going to be non-competitive.
Yeah.
So it was really sitting down and creating a system where unfortunately everyone got their share of it. Again, it wasn't a lot, but at least, kind of don't have the crumb so that at least everyone was at least somewhat happy.
Got it. Okay. And so did they end up like successfully launching in South America then?
South Africa,
South
yes.
Africa.
Yeah. It was a very interesting, yeah. So it was a product that was going to the Chinese locomotives that were being built in South Africa.
Got it. Okay. Interesting. So just looking at my notes here, next on the list, and I didn't write what role this was associated with, but the inventory strategy that in some of your more recent roles, you had listed something regarding inventory strategy that you had set up. I could probably find it in my notes here, but does that ring a bell at all?
Yeah, I know what you're talking about.
Okay.
So we had bought a company, basically a mom and pop shop, and their day supply of inventory was about 360. they had a full year supply of inventory on their shelf. Now, the industry average for that we're in is like 90 days. They have 4 times the normal amount of inventory, and the reason why was that they felt they needed all that inventory to be very responsive to the customer. That was how this is how we grew. In the 70s and 80s and 90s, we were able to keep all this inventory on hand, and whatever our customer wanted, it was almost like the Radio Shack. They were like a Radio Shack. You could call them and say, "Hey, I need, bunny ears for my TV," and they would walk out, and guess what? They had bunny ears on the shelf. Probably 90% of the people won't know what I'm talking about, but Google it. You'll see what I'm talking about. But that's how they approached the business. They just wanted to be ensure that the customer picked up the phone and called for something that, the next day it was on the truck.
Yeah. They were reliable.
Exactly. So it was just again, this is really when you're working with a new acquisition, the first thing I always did is I jumped on the plane and went out there and just really had a heart to heart with them. Kind of explained to them, hey, I'm here to be a business partner. You can be the guy that's yelling at you that you're not making your plan or you got too much inventory, but I'm not going to jump on the plane and go back to corporate. I'm going to sit here and let's create a plan. Once I had that foundation of trust and I started working with the purchasing people and the general manager, okay, let's just start from the top. Let's run your inventory. What's happening? And one of the things I found out was in order to keep their margins up, if they needed 5 widgets, but they were going to get a price discount for 12, they would buy 12.
Okay.
In their mind, it was a great thing. Hey, I just saved, 5%. I got 5% discount for buying 12 widgets. But I'm like, but there's a cost. Now you have 7 widgets sitting on your shelf.
Yeah.
And who knows when you're going to sell the 7 widgets. So I understand why you're doing it, but here's the cost. And that was the one thing, was just really trying to let them know there is a cost of inventory. There is a cost of money. If you're a year supply of inventory to save 5%,
Yeah.
yeah, you're saving money today, but now that's going to sit on the shelf. Now you're facing obsolescence. You have a huge warehouse and half the inventory you really don't need.
So it's kind of like when my girlfriend says it's a 20% off sale and that
Yes.
it's a great deal on a sweater she doesn't need.
Yeah. Well,
Yeah.
no
It's
comment.
it's still money out the door.
It is. Yeah. And that's, yeah. So and they were buying and they had inventory for a project that they did 3 or 4 years ago that you never know they might call. I'm like, well, if they do call, if it's something you don't make every day, then this is what, in my opinion, is almost called a premium item. It's not a commodity item.
Yeah.
Eh, if no one else can make this product, then you don't need to keep a year supply of it on your shelf, if it's something you make every 3 or 4 years, you don't need to keep on your shelf. Just make it, and then quite honestly, you could probably charge them more for it because if they can't call anyone else, and it's such a specialty product. Um, don't, in other words, don't put yourself on the line to to make this as cheap as you can if it's going to put you in a bad position.
Yeah. So, and apologies if I missed it. So with you came in, you got trust with the new acquisition, and your ultimate solution was it kind of in line with just in time manufacturing where it was like, hey,
Oh, yeah.
don't buy. I know it's a good deal on paper, but you don't need to buy that because your demand isn't there. We don't know when the demand's going to be there for the excess inventory that you're buying.
Again, it was just really a change of the mindset, just working with them
Mm,
constantly. And it was
yeah.
I keep saying baby steps. A lot of times that's what these are.
Yeah.
It- Just to, let's look at this. Okay. Again, the buying just to get discounts. Okay, that's a bad situation. I explained it to them. I kind of showed them what was happening, the impact. They understood, so that stopped, and then that went from 360 days maybe down to 200. Then the next one is again, you have inventory on the shelves for products or project that might not happen for another 5 years. Well, let's address those. We actually did scrap a lot of the inventory just because again, it was they have bought things for projects that probably would never happen again, but even those that's always the funny thing is, the way our accounting policy was, we would 100% reserve it. So technically there's no finance hit, but there is, it's still sitting on the shelf.
Yeah.
It's sitting there, and every time you do a physical inventory, you have to count it. It's sitting there, and now your team's less efficient because instead, maybe if you could get your inventory down to 12 racks sections, you're up to 20. So now they have to walk all the way down to grab product and bring it back because they're literally walking past dead inventory to get to the inventory they want. So again, it was just really, kind of showing them that things like that, and again, just always being there, working with them, being that business partner, and is kind of getting their, just to, like you said, it's making their lives better.
Yeah. Well, I think I love the piece that you had there because it's like it is. Some people will try to explain it. Oh, it's we just have more inventory than we need. But when you just explained how you showed them, oh, we have to walk past this. Like it
Yeah.
is consuming much more than just sitting there. There's like all those different factors that go into it. Well, now in relation to that, so you were part of 3 different acquisitions. That was one of them. What other challenges did you face while integrating these new companies? Because acquisition and integration is something that obviously eats up a lot of the finance team's time and getting about everybody on the same systems and processes and just even cultural page, honestly.
Well, the first thing I always try to do is what you said, get everyone on the same system. For example, that one I was just talking about the inventory, when we bought them, they were still using green bar dot matrix printer. All the monitors were still green screen.
Okay.
Obviously no chance of any harmonization or shared services or streamlining processes when you have that type of system. It's the first thing again. I would the county wise, I would always try to get them into the shared services model. Like I said, I've always tried to standardize work, and the reason for that is, especially like during the Great Resignation, you never know when the person you're going to get a phone call and someone's going to leave.
Right.
So I've always tried to set up that I can move someone from location A to location B, and maybe things are slightly different, but within a week, location B can, help out and, do the month end close. Why? Because we're all using the same reports, we're all using the same systems, the same approach. So I think really having that common, being able to speak the same language is very critical. In the same, it just really, again, you have to spend a lot of time, but it's just really getting them more into that culture. Again, a lot of the companies we bought were very mom and pop
Sure.
organizations,
Yeah.
and it's just really getting that buy-in, just working with them, but again, you have to be that business partner. You cannot just be that person who shows up, yells at them, says do better, and then leaves. You gotta be that person that says, okay, we need to do better, and then you're there, using your experience, your background to really help them achieve what they need to do.
Right.
And we're successful. We bought one uh, company, and they were, I think they were like 14 million at the time. The goal was to get them up to 18 million within 5 years, and we had them up at 20 million. And we did that through a lot of uh, it changes. The first time we did physical inventory at the location, I almost walked off. The only reason I stayed
Okay.
because they couldn't find half their inventory. It was terrible. I was calling my boss. I'm like, "This is a joke. I'm coming back." He's like, "You can't. We need to verify the beginning balance sheet."
Right.
The inventory. He's like, "How do we know? We bought $10 million of inventory. How do we know we actually have that there?"
Right.
So I had to do like an physical inventory, and we found the A's, we found the B's and the C's. We just had to assume that. I think we just did random testing. If not, I've been there for 'em. But now they're the showroom, you know, part of it was, we brought in a couple of people that, really, turn things around, really great at what they did. And again, just a constant change, just constant improvements.
Yeah. So when you look at going into those acquisitions and starting the integration process, um, were there any things that you guys tried to do where you're like, this is a good idea? This is going to make integrating easier and faster that actually didn't do anything at all?
Well, like trying to think of something that we tried that didn't work. Again, it was
And
always
it's okay if not.
well. Again, we've always tried to sit down and talk to them and really, like you said, get the buy-in. And usually, if there was any issues, it was usually personnel issues, or maybe the person that was there really was not the right person for the
Common one.
company.
Yep.
And that happens a lot. You buy a company, you find out that some of the team members really are not the I can put this uh, the
They don't
skill
have the
set.
technical skills that they need.
Yeah, I mean, the skill set and the mindset of, working for a little like I said, a little local owned company. It's definitely a little bit different when you're part of now a Fortune 500 company.
Right. I get those calls a lot.
Yeah, I'm sure you do.
Hey,
Yeah.
Alex, just bought this $15 million add-on for our platform company. We need help.
Yes.
Top grading is what we refer to that as. Um, excellent. Now, one fun one that I know everyone's going to love, that I know you're excited to talk about, that I know I'm excited to talk about, increasing the forecasting accuracy from 80% to 97%. Walk us
Yes.
through the situation,
Oh,
what the problem was, and what that allowed the business to do after you solved that.
well, the problem was, so I get called into my boss's office, and he holds up a piece of paper, and it's a bunch of X's, and most of them are red. A little bit, some of them are green, but most of them are red. And that is not his kid's Christmas art project that he's holding. It
Yep.
is our inventory slash guidance accuracy. How can I put that? I know young children will be watching this, so I'll watch my language here, but we were terrible. I mean,
Yeah.
you cannot justify or be like, well, we were terrible. And what was even worse was, so the way things work, you do your annual budget, and then, life changes. And so you do a monthly forecast, but even then life still changes even faster. So we would do like weekly guidance. And if I literally had a location on Friday, they said we are going to miss the month by 10%. So, oh man, and I email that Friday. It's, a terrible month.
Yeah.
Come Monday morning, they blew out their forecast by like 15%, which what does that do to us? Makes us look like we have no idea what's going on.
Right.
It makes the executive office question, our judgment, our professionalism, everything. It's, forget the pleasant surprise. It's not really a pleasant surprise. So,
Yeah.
everyone had a terrible weekend because of that, for no reason. And the reason we were doing guidance is, the executive office, they were using that to update their EPS to the street.
Right.
Do we need to borrow money, or can we start paying off? Maybe there's something we pay off, or we buy back shares? It was a very critical position, but and everyone knew that. The reason So, obviously I saw that red, and, I knew something needed to be done. But the reason I like this example, it really just shows what one little small change can really do. Usually when people say, "Oh, I need to make a change," they think they need to go out and buy a $1 billion ERP system or some third party system.
Yep.
I had a boss very early in my career who told me instant messages are great for saying yes or no. Emails are great for some basic communication, but if you need to make a change or get real information, make that Teams call. And that's what I started doing, because we were doing weekly, updates, but it was just an email I sent out.
Yeah.
Uh, and, everyone knew the importance of it, but I think what was really happening was it was just one more deliverable on everyone's desk. And so I
Right.
went to my email inbox. So yeah, we're good for the month, or I had some locations, "Oh, it's gonna be terrible." What did I change? I started calling people and talking to them well, what's going on? And just
Who are
saying that.
these? Who are these people that you were calling?
So the general manager. So we had like 7 locations.
Yep.
So
So
I,
the people running the manufacturing facilities
yeah,
for those not in the
people,
manufacturing space.
the people right there at that's literally watching the product go out the door. The people that are, they know, like productivity. Are we going to be, how's a month going for productivity? That's the people that, I started, so I call the general managers and controllers at the locations. And, I would talk to them. And what I found out was, by doing that call, they would be a little bit more open. You would find, during the call, they would say, oh, by the way, there is a chance that, something good could happen. Cause why, a lot of them were just through email, I was getting every possible negative, but never any probable good guy. Whereas if once you start talking to them, I kind of get the full story. And
Mm,
again, it was just that small little change of just really spending, an hour, 2 hour, like each week calling the locations and really just getting that detailed information. And the result was that we went from being, again, almost a laughing stock to we were dead. Early 2025, we were dead on
yeah.
our targets.
97% is pretty good.
It is. And then what does that do? It makes us look like we actually know what we're saying.
Yeah.
People can now trust us and they can count on us. So if I say you're going to see X, then that's what
Yeah.
you're going to see.
Well, that's what leadership needs. And like that is what separates those who simply report numbers than those who are actually involved in the business. And I
Yes.
think that's having as many conversations that I do in a week. That's what every aspiring accounting and finance professional wants to be, is someone who's value added, someone who is part of the business and helping the leadership team, if they're not on it already, make those right decisions. So in summary, in that regard, you were able to increase the forecasting accuracy by 17% by simply setting a recurring call on a weekly basis to the
Exactly.
people that were closest to the numbers to find out the things that were kind of last minute that weren't included in the reports that you could then add into your forecast as a potential plus or minus.
Yeah, exactly. Yeah, like I said, no multi, ERP systems,
Yeah.
no
Simple phone call.
system. Yeah, it's amazing. Just phone calls will do.
Mm, love it. So we've talked about a lot here, Kevin. I see the general themes. We've talked about a lot of very specific situations you've been in. You kind of mentioned it in pre-call as well, but any last minute comments on kind of the overall ways that you're able to come in and just be so process improvement oriented and have had such great success in all of those different case studies we just went over?
Yeah, and we had talked through before the call. What's the one thing that I do that probably doesn't show up on a piece of paper? And I hope people understand what I'm saying. I keep the plate spinning in all the locations that report to me. And, it's a very critical skill, but it's one that really people don't really talk about. If you go on LinkedIn and list your skills, making sure the plates are spinning, is not
Mhm.
one.
Explain that just in case people don't know.
Yeah, so it's old trick where it's you have a stick and you have a plate on top and you go like this and the
Yep.
plate spins. And if you ever see them, there's people who can keep like, 20 different walking around and spinning the stick, they'll keep 20 plates just spinning on top of the stick. It's a very, and the reason I say that, it's just really a way to ensure that no one is wasting time at the locations and they're all doing what they're supposed to be doing. I guess it's, really just managing the locations, but it's a little bit more fancy way of saying it. But it's just ensuring that we're doing what we're supposed to be doing. It's not in addition to what, the normal day to day, it was not uncommon for us to be working on emergency issue number one, emergency number 2, and it never failed. I always call them the Thursday afternoon emergencies. And what these were the C-level executives were going to fly somewhere over the weekend. So they needed something to read. So, hey, we need to know about this. So you would get the thing from corporate, and it was always Thursday afternoon because that way it was due Friday by noon, so they can consolidate it Friday afternoon and send to the C-suite executives. So again, so they had something to read on the plane.
Okay.
And what I really found there is the key there was the first thing we usually would do would be call the requester because a lot of times the emails would be very generic. I think that probably the best example when this is verbatim what happened is when tariffs came out. I got the email that said the executives want to know what the impact of tariffs will be due in 2 weeks. Well, okay. So first thing I did was call the person. I'm like, what exactly are you looking for? And we kind of went through and then, well, it'd be nice if we saw, by impact by country. Okay. And the thing with tariffs is you pay the tariffs on the buy items, but if you're going to recoup anything from your customer, it's going to be on your what you sell to them.
Right.
And for us, that level could be, we have items that, I buy A, but I really sell O. I mean, that's literally the levels of the bills of material that we have. So once I understand that, what can I do is I'll pick up ChatGPT while I'm driving home, and I'll read my instructions into ChatGPT,
Mm-hmm.
and then try to send out very clear instructions to my team. And the reason why is I don't want wasting. There's two reasons for that. I don't want anyone wasting their time. Nothing is worse when if you say do something and then you get 7 different answers and it's like, "No, that's not what I really wanted. Let's restart from scratch." There's just, a lot of
Yeah.
times there's just not enough time for that. And the second thing is just to be consistent. If I want consistent results, you need to give out consistent, work instructions. There's an excellent program called, Draw a Pig.
Okay.
If I ever come back, I would like to almost spend a whole hour just talking about that. But that's really what it's talking about is, if you ask people to do something, they'll give it to you, but it's what they think you want.
Right.
It might not be what you really want.
I know exactly what you mean. It's like it's the joke is like if you tell an engineer if you there's some video in the
I
social world and it's like someone writes an instruction on how to make a peanut butter jelly sandwich and the guy reads it like an engineer would and he literally drops a knife in the peanut butter because it says put the knife in peanut butter and
Jeez.
if you don't show them what path to start walking down they might pick the wrong one. So in a way to keep that plate spinning so to speak you're like okay here's what we need to do. Here's your starting point, and here's what I want it to be. So it's kind of, it's not micromanagement. It's leadership towards what you actually want done.
It's focusing the team on the exact goal so that
Yeah.
they're not, again, off meandering, doing something that
Yeah.
yeah, everyone is always trying to help. Everyone's trying to do their best, but a lot of times, again, it's how you get there sometimes is not really, maybe how they want to get there is not the right way.
Right. Right. And yeah, there's no point in if you have a good idea of like what you want done, it's always best to like, don't leave the guesswork. Don't assume I
Yeah,
think the same way as you do.
yeah.
But I think
And,
that's oh, go
and
ahead.
yeah, no, I was gonna say again, it's back to the phone thing. If you get something and you're not clear,
Yeah.
call the requester. What exactly are you looking for?
Right.
Again, no one's
Save a
wasting.
ton of time.
Again, so they're going to get exactly what they're asking for, because that's happened before. If not, then you give them you think you're doing the right thing, you give it to them, and then you get the response, "No, no, no, I really wanted that." And now everyone
Right.
has to curl over and, it's a waste of resources.
Yeah. 100%. I think this is a good spot for us to wrap here, Kevin. We've covered a lot. I think we probably have a couple of those problem solution uh, statements, if you will. We talked about integrating acquisitions. We talked about uh, kind of how to get those new acquisitions on your side. That same principle applies to changing up processes, changing up ERPs. So um, that is everything I had for us here today, really. Thank you so much for coming on here and giving us your guidance and the overview and the specific situations that you've went through. Before we jump, is there anything, when it comes to solving problems or anything like kind of tactical, but also higher level, any just general advice or any pieces of advice you got early on in your career that you want to pass along?
Well, actually, I like to pass along the advice that you and I have been working on. And,
Sure.
the one thing I would tell everyone is figure out what your finance impact narrative is. What's that one thing you can do that no one else can? And you need to get that story out to everyone in your organization. You need to get that out in your LinkedIn. I think, I think we might be entering a part of accounting where if you don't stick out, you're going to get left behind. I really do think you need the story. If you're working on a project, and it's going to be presented to the executives. Obviously don't barge in there, but see if you can even sit in the corner just to kind of get your name in there, so people know that you know what you've done, what you're contributing.
Yeah, that's great advice. I love that last piece, and of course, I love hearing that word, finance impact narrative. I will always take some shameless plugs where I can.
No,
Awesome.
yeah, no. Again, I think it is really great advice. Just to really, again, just to help people really understand what they contribute. And really stand out.
I love your wording of it too. That was a very good. That was an excellent recap. Honestly, better than I can put it. In
Thank you.
a lot of ways. So awesome, Kevin. Thanks again for coming on here today. This was a blast. I'm sure I'll talk to you soon.
Yeah. Yes. Yeah. If you ever need me to come on, let me know.
Yeah, excellent.